Hello, I'm Greg Bennell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis and investment insights that boost your trading potential. Coming up, investors are keeping an ear out for any trade developments from the ongoing talks in London between the world's two largest economies. Plus, the Russell 2000 gaining momentum, signaling renewed strength in small-cap stocks. This is just ahead of talk from traders that potentially will see a summer pickup, a bit of a rally in those names. And Chewy is in focus as our trading debaters are standing by with the bull and bear cases for the online pet retailer. That's all ahead. You're watching TD Active Trader Live. Get a quick check-in on the markets. We'll take a look at the S&P 500. Some modest optimism out there, cautious optimism, a modest green on the screen. We are waiting, as we said, those details out of London as the China-U.S. trade talks continue. Not expecting them to solve all their problems, but a headline wouldn't hurt. China's critical minerals, a key issue there. And then tomorrow we get another inflation print out of the States, so lots to keep an eye on. Let's jump into the heat map, see if we can figure out what's going on with this modest green. And we're getting a modest bid into some of the tech names, whether it's Google or Meta or Apple. Nothing too impressive on this front. And the healthcare stocks are holding in despite some changes at the CDC when it comes to the vaccine advisory panel. Let's take a look at McDonald's. It is modestly lower today. The street continues to question the fast food chain's pricing power. 3 downgrades in 3 days. Weight loss drugs, part of the discussion here because that's apparently shifting some consumer habits. So it's an interesting name to watch. It is a behemoth, and we'll see how the street continues to feel about McDonald's. And that's your market update. Joining us now for a more technical take on what is happening in the markets here in Amin, Jason Nadek from our TD Direct Investing educational team. Gentlemen, always great to have you here. What do you got on your radar?
All right, Greg, you kicked it off. We're doing the RUT. The RUT is the symbol, Russell 2000 index. We haven't gone back to the small caps ever since we saw the April kickoff onto most of the major indexes. The Russell 2000, of course, for our folks, just so they know, this is representative of the small cap stocks in the U.S. 2,000 of them approximately. One of the primary risks with this sort of cohort of companies is interest rates. And we know with the hawkish federal stance, with the higher for longer agenda, which seems to be the case right now, that has really added pressure to the small caps and their sensitivity due to their sensitivity to borrowing costs. Now, one of the things I've just pulled up the chart here. We're looking at the daily chart right now. We saw the swing lows coming off of April down to these swing lows, but it's been in that clear uptrend like many of the major indexes, like the SPY and the triple Qs as well. But what you also saw recently, just over the last couple of days, is it broke this key level of 2,115. Now, this was a level that it kind of rejected back in like March when it tried to do when it had a leg up and got rejected, where we saw that big fall through. So now this could bring some positive momentum. We see the 2,200 is the next kind of level to broker and go up to that major resistance, which is sitting in that 2,300 level. We're still clearly below the overall bullish channel that we formed up here. This dates back to almost 2-3 years that it's there. So it's still got some room to go there, but it's right now what we're seeing also on the RSI and the MACD, which tells us about the momentum of the strength of this this sort of uptrend that is formed, is we're seeing RSI making new higher highs, which tells us the momentum is still building up, and then MACD is also in positive territory, but also that the MACD line is above the signal line as well, also signaling that we still got some room to go up, but we'll see that 2,200 will be the key level to keep an eye on there.
All right, there's the U.S. small and mid caps. What about silver? Poor man's gold, but it's not looking so poor.
No, not looking so poor, exactly, yeah. Silver's kind of hit what might be into a super cycle, might be underway. It actually just broke one of the most significant levels that we have, and I'm just going to build this up on the chart. So you've seen a couple things with silver. So silver broke through this 35 level. It hadn't done so in the last 13 years. I just marked it up on the chart. This is a 13-year high. Wow. So this is going back to approximately 2011. When silver broke this level, and within 7 months after that, silver was then had a run up all the way to its all-time high, about $49.84. So we could see this sort of this move. A lot of it is driven by the fact that there's silver's a unique metal in the sense, and I was talking to Jay about this earlier, is that it isn't mined directly. It's in fact most of its sourcing is a byproduct of mining of lead, zinc, copper, and gold, and that's how you have 73% of the accumulation of silver. But so you have a very stagnant supply, but demand is booming because of solar panels and electrification, and mainly from China. Almost 15 to 17% of the global silver demand is now from solar. That's projected to go about 85 to 98% of by 2050. There is going to be what the solar demand is going to be for silver there. So one to keep an eye on. We can see this level. The next level to breach is that 37.60 is just within inches of that coming forward. But there's projections now with Bank of America saying that silver could hit that 40 mark by end of year very easily and sustain itself there. So this is another one to keep an eye on the gray metal. The one last thing I'll leave everyone with is the gold-silver ratio. That's typically a historical measure we look at, and that just tells us how many ounces of silver to 1 ounce of gold, essentially. Right now, we were at a very low valuation. We just came off of a 100 ratio, which means that approximately 100 ounces of silver to 1 ounce of gold. And typically, whenever you have these sharp low valuations on silver, there's a sharp correction downwards. So we should see that sort of impetus now catching up with gold's momentum as well.
Interesting stuff. You have a very interesting stock in your radar. Can't seem to stay out of the headlines.
No,
at least tangential.
That's true. And I was trying to come up with a reason not to talk about it, but it's one of those ones that it's on everybody's mind, on everybody's tip of the tongue. We're going to talk Tesla in just a moment here. On a normal day, it's one of the most recognized, most highly traded active companies, but we're all very much aware of the very public feud going on between Tesla CEO Elon Musk and President Trump. Now, there seems to be, at least from the Elon side, there's walking back, even some deleting of some of the tweets. There seem to be inching back closer together, but we'll see how that plays out. But before we get into the two charts, there was really two quick things that kind of caught my eye. One coming up later this week. It's June 12th. It's kind of a big moment for the robo-taxi arm of their business. Now, I'm going to sketch this in with pencil because
we're expecting.
We're expecting, right? Tesla's got a long history of pushing things out. But a really interesting story here, right? This was the much publicized launch of the robotaxi, the full self-driving vehicles that they launched or announced rather back in October. They're launching this out in Austin, Texas, and they've got one of their big competitors, Waymo's got a partnership with Uber. They've been already operating in the market for a number of months, so it'll be interesting to see if this can get off the ground in time. But the next thing here is transitioning over to sales. First here, a little closer home here in Canada. Tesla's actually overtaken in terms of net sales by GM over the last number of quarters. So they're now sitting atop the perch. So that's news that kind of I was unexpected to see. But then also Quebec appears to be the largest adopters of EV drivers here in the country. Their sales over that same time period, last 2 quarters, have dropped 85% when we're talking Tesla. And moving across the board, one of the big topics of conversation, I think we talked about it here on the program, was China's BYD. They've taken a big step forward in terms of their sales compared to Tesla. They've actually increased up to over that same period. They've outsold Tesla 3-1, and Tesla's recently had their quarter was the lowest in terms of sales since Q2 2022. But jumping into the chart, we can see here since the stock hit 360, kind of a near-term resistance level, you can see there's some big down days with a lot of the public feud going on. The stock traded off 21%, but in the last 2 days, even this morning, as I zoom in onto the chart, you can see that we've gapped up this morning. So we've big green candle. With the longer the body, you can see that's the stronger that the sea of value is that we can see the buyers have. But I do want to, you can see I've got the dotted line drawn on the chart. I'll be looking to see if the pattern is going to hold once we do reapproach $60, because that could be, if it's going to show some weakness at the level, there's an opportunity for a double top be forming in this regard. But interesting, I've got also noted on the chart when we had the big gap down or the big red candle, largest volume day since about 26 months. So that's a pretty significant day on a stock that's already very actively traded.
All right, interesting things there. Thanks for that, gentlemen. If you at home have a question for our team, here's how you can get in touch with us. Just email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website, where you can try out the TD Active Trader platform risk-free by opening a practice account. You can just click on the Try TD Active Trader button. It is time now for trading, debating. And this week, the stock in the spotlight is Chewy, that American online retailer of pet food, other pet-related supplies and services. Before we get going with the debate, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. All right, back to the stock of the hour. Chewy made you guys pick this stock to debate. You got pets at home? Pets at home?
I'm a godfather to a pet. I don't know, a godfather. The neighbor's cat Milo. Yeah.
You give him life advice?
I do.
All the time?
Anytime he needs a pep talk or anything, he's over. But yeah, this is a big thing. Chewy specifically, obviously, is the largest e-commerce retailer in the U.S. for pets. They've entered a market where it's a growing total addressable market that seems to be moving from Europe even to US. Like 66% of Americans right now of households own a pet as of 2024. So as they become more prominent in people's lives, companies like Chewy will obviously feature more prominently as well in their wallets, hopefully.
And pet stuff online. I don't know. Is that a factor, Jay?
Yeah, it sure is. Now, I can speak from experience. I've got 2 cats at home, and sure, there's always something that you want to buy for them. And Chewy is very kind of uniquely positioned in the marketplace, and it's got. As we dig in, we'll talk about it. It's got shadesofpets.com in terms of how that went, and we'll interesting to see how we how they can forge their road forward as well.
Not that I've been on the platform lately, but I'm assuming they have the skunk spray treatment as well, because I keep a big bottle of that in home.
Yes, I probably need to give one of those.
Doesn't matter how many times he gets sprayed, he sees that skunk, he thinks it's his best friend. Yeah. All right, let's get some time on the clock. You each have 2.5 minutes to make your case. Then we'll give you some time to counter. You draw from a hat as always. Kieran, you got the bull. Why don't you kick things off for us? Yeah,
absolutely. So, Chewy's a company that's sort of clawed its way out of Wall Street's doghouse. It's posted a huge rally over the last 12 months. It's not only the market leader for online pet products, it roughly holds around a 30% market share, being a market leader in a very rapidly industry that's capitalizing on structural wins. And I'm going to start by talking about the industry resilience as well. And I'm going to give a quote just from the CFO, David Reeder. He said, I don't think any industry is recession proof, but if an industry that is recession resilient, it is going to be pet. And I kind of I agree with that, because I think of it as akin to when you have babies and you go and get baby products, it's recession resilient. You need those things for your pets. And with more and more sort of pet parents, considering their fur babies as part of their family, they're going to be, they'll be willing to open their share of the wallet for them. Also, the pet ownership, 66% of households, now owns pets. That trend is growing. Projected to, the pet industry is projected to go from 100 billion to 275 billion in 2030. And again, Chewy holds a commanding share of that. So that's a lot of that money and revenue that would potentially flow to Chewy's bottom line there. The other thing I want to talk about is their revenue model that they have, the Autoship program. It allows them to create sticky customers and revenues there, which is key. They have this program which allows you to get discounts on if customers sign up for it on deliveries such as foods and treats, which is fantastic. It accounts for 80% of their net sales right now that they're going. And this is a high margin revenue stream, and they've been growing 8.7% year over year on that piece as well. I'll talk about the active users in just a moment, but I want to bring up the charts. I've got the charts pulled up. It's a weekly chart, and it is a beautiful chart if you ask me. All right, so here's what I want to show us. So I've dated it back to 2023. What you saw was a big bearish downtrend. This is what I mentioned, it's coming out of the doghouse. It broke out of this big bearish downtrend in 2024. It's kind of chopping sideways, but now we've entered this big bullish channel that we see over here. It's kind of broken these key support levels. One is the 3350. It never really touched that. It was rejecting off of that level. Now it's broken through that, and it's broken through this key $40 level, which it didn't hit since last of June 2023. So you have momentum squarely on its side right now. Also, if you look at the RSI, it is making higher highs. Yes, it kind of reversed a bit over there, but it is still strongly uptrending. It hasn't made a new lower low for a reversal yet. So that'll be a key to see if it can keep brokering past this level. And 55 is the next level to look at when you come into this chart.
You get time, but I'm going to ring you in anyway.
Yeah.
It's part of the fun of the show, right?
It is.
Why do we have a bell? Why do we have a bell? All right, yeah. Jay. Kieran was the bull. He's not even a pet owner. You're a pet owner. You're the bear. What's the argument? What's the argument?
Now, I know the pet owners out there can be, especially on the internet, can be a passionate group, so don't come after me. I'm just bearish on the company for our argument's sake here today. But, all right, so one of the first things that I do as part of my research is I want to go and look and see what other analysts are saying, right? Just to kind of level set, get the ball rolling. And to what I saw here, the average analyst rating have the company actually rated below in terms of their price, below what Chewy's trading at right now. So it's kind of, and they've actually got a 10-side downside projection. So, that kind of set me off a little, set me off on my path. And that I started thinking, well, there's smoke, well, there potentially is maybe some fire. So let's dig in to see what we've got. And here laid out the case in terms of, being an interesting leader. But one of the things that really jumped out to me was competition. All right. So this is not it's an elbows up type of thing. It's just not an easy place. It's just because you don't have to be an exclusive pet retailer to be involved in this. And I'll just focus in on Amazon. Amazon is just one big example, but they're, the big kid on the block, right? People need to justify the money that they're spending on their Amazon Prime. So maybe they're just going to be maybe transition some of that shopping over there. When we're thinking about just in 2024, Chewy sold their sales were $7 billion in terms of pet supplies, less than Amazon. So we've got that pointing out to me it's not an easy way. And then when you think about declining growth, it also paints a sobering picture there. 2021, they had growth in 24%. And steps all the way down. When we're thinking last year, that was in the mid-single digits to just 6.4%. So the growth is slowing, and they've got the big competitors outselling them. In terms of, and the next thing where I'm thinking there could be some fire is overvaluation. Couple highlights for everybody here is price to free cash flow. Typically anything over 10 would be overvalued. Chewy's sitting almost at 40 at 39.4. Lastly is price to earnings. 51.7 is considered high, especially when we look at other online retailers, Ulta, Dick's, and TSC. These are in the teens to low 20s, so that's something to really think about. Let's jump ourselves into the chart. I've got here and looked at the weekly. I've got the daily up in the chart. Chewy's certainly been on a nice run, up 120%. But let's zoom in to kind of nearer time frames. It's approaching a 3-year resistance points, and it's around one of those conveniently round numbers of $50. The stock's not shown a propensity to be above that. And when we start to think about, yes, the long run up, what I've been looking at on the chart is a lot of these momentum indicators have turned around and showing the stock might be running out of steam. We've got the money flow. We've got RSI is showing as well. Last thing to put on here is what's called an evening star.
No time for the last thing.
We'll bring that back up in a little bit, I think.
Bum, 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 bum. So, all right, but you got time you can go back on the platform as much as you want, as you have a chance to counter each other for 3 minutes, free form. We'll give here in the first word. Someone's got to talk first, but don't be shy.
I'll go for it. You know what? I'm gonna finish off my point about the recurring revenue model, and you talked about margins, so we'll get back to that. But just when you think about their active users, which they've sort of got in the subscription platform, that's also grown significantly. They're sitting about 20.5 million. When you talk about the revenue per subscriber right now, that sits at about $578 per user, and that's going up about 9% year over year so far. So that's again boosting those margins. But they've also entered beyond just like the little trinkets and food and supplies and things. They've got into now, they have the biggest pet pharmacy in the US, and they're opening now vet clinics, in fact. So that's going to be part of the entire ecosystem. They're really franchising those clients through the entire ecosystem. That's really tapping into a $25 billion market. They have a service called Chewy Vet Care Taps. Chewy Plus membership program, I should say, which is what you get discounts on their vet care program that they offer there. Now, I want to talk about the numbers because, Jay, you came out with some of those numbers. Yeah, granted, though, some of those valuations might seem high, but when you think about like its direct competitor, which is Petco, in this world, they're far, they're miles apart from in terms of valuation. When you look at forward PE, which is the one, in terms of growth, trailing PE might be another number, but forward PE is what you want to really focus on. They're sitting about 29.98x, and it's justified because they have over the next 5 years, the estimated growth is going to be about 150% on the.
Being awfully generous here, Jay, with the time. Awfully generous.
Wait for a breath here, but if we want to think about talking about overvalued and expensive, let's talk about even pet ownership too. We don't want to discount that because dogs itself, low end of the average, $20,000 over the lifetime. Cats aren't far behind. When we're thinking about going into an unstable economy, I think people need to be considering with that. And I hate to say it, but shelters are starting to see more pets return back to them. But jumping back to the chart here, what I wanted to highlight for everybody, because we've been on a significant bull trend. We're always looking for those reversal signals when there might be an opportunity to go short or to exit long positions. I've got an evening star that's popping up. It doesn't come up that often, but it's typically reliable when it does. We've got a big green candle followed by a short body candle, sometimes a doji, followed by a significant red candle, at least 50% of the size of the green, and that's that's displayed here. Then if we even take that even under a shorter time period, if I go into something a little bit shorter in terms of an hourly time frame, one of Kieran's most favorite patterns here, I keep bringing that up just in repeating for effect here, but we've got a cup and handle forming over the last lumber.
Drove the inverted.
Using his strengths against him.
This is your kryptonite here. So the cup and handles, it's that confirmation we look for across the technical analysis that could be showing that the reversal pattern might be at foot.
Well, I'll bring a pattern up on my chart here. I wanted to show. I'm on the daily chart over here. We've got a scallop bullish pattern that's formed. We haven't shown the scallop before, but it's a quick swing move that's broken up above this upper bullish resistance line. Now, given there was a gap that formed that came down, but it's going to reject at that 45, and we probably see a bounce off of that level.
Chart versus chart.
Yeah.
All right, now we're going to have a little chance to explain, go into the platform, how you can possibly play this through options. So the bull, let's hear from the bull.
Yeah, absolutely, Greg. So the trade that I'll be considering here is just looking at the options pricing. I looked at the expiry for this week to just see what the potential move is. Typically, stocks around earnings will do about an 8 to 10% move if it's outsized. Chewy's is expecting to do roughly about $8.50 to $9 move either side to the up to the upside or to the bottom. So coming into this print, what the trade I'm going to consider is a calendar spread. So essentially what we'll be doing is selling the front month or near-term option and then buying a further one out for a longer-term play. So here's the setup. I'm going to bring up the options chain for a second, and we'll just show everyone what the setup is. So looking to sell next week, so the 20th of June expiry, which will be the $50 strike call, which is a little bit further out, because I do think that it could run into some resistance at that level. But for the further dated out one, which is the 25th of July, giving me approximately about 42 days, we're looking to go long in that $50 call. Now, the way this trade works is essentially it's a net debit trade, so I'm still going to be paying for it, but it's reduced my cost. And so right now we're looking to get in just shy of the prices moved down and coming close to the midpoint, about $1 over here. So essentially where our break even is going to be is we want the price to move. We don't want it to move in the next couple of weeks, but we do want it to move thereafter, build some momentum into it. So at least 51 or higher is where our break even lies. So from that point onwards, it's potentially unlimited profit potential on that side. And then, of course, I know you like to ask.
What's the downside?
What's the downside?
Always risk in this world.
Is if it doesn't move in that direction, of course. If it stays below 50 or calls back leading up to expiry, then we'll start losing that premium. And essentially, it's $1 is what we're staking right now. So it's $100 plus the commission is what we'd lose in that trade.
Okay, interesting trade. How could a bear possibly play it, Jay?
Yeah, so kind of going back to my discussion around kind of overvalued nature in terms of Chewy's share price, and another thing that kind of jumped out to me was we've got some big time insider selling, right? So is there information that's known that's out there, and people that have the best look at the company, they've made big sales, and it's led by their CEO is sold quite a large portion of his position. So given the volatile nature and understanding that we've one of their PetSmart just recently came out with their earnings, and they've sold off quite significantly since as well. So if we can establish a similar pattern here, there's an opportunity to go to buy some puts, right? And when we're thinking about buying puts, it is a very directional play. I do need to go in the downward direction. But with this type of trade, I can opportunity to buy a little bit extra time. If we bring up the chart here, I put on two different strike prices. So I kind of talked through some different considerations. I put on a 42.5 and then a 40. And then that price line that I put on, the timeline is out to September. It gives me an opportunity to actually experience two earnings events. In this particular case, the September earnings events, the volatility is not going to be priced into these. So hoping able to get the cost of the premium, without extra inflation already put into it. The 42.5 so would be certainly going to be more expensive to purchase, but I'm going to have an opportunity to be profitable sooner. So I'm risking a little bit more up front, whereas the 40s might be a little bit cheaper, but they're not going to trail, and they're not going to track the movements of the underlying price as closely. So if I just bring my order ticket up from the bottom of the screen, if I'm going to be buying, I happen to have 5 in here on that, but if I'm going to be buying right now, they're trading at $3.40. So that's going back to the risk perspective that we would talk about, $340 per contract or $340 per contract would be the max gain. But if I'm thinking about break even, subtracting the $340 off the $42.50, I would need that to go down to let's see if I can do my math here. What is that? 38.10, I guess.
Yeah, 38.
38. So I would need to get it in it, but I've got myself those two earnings events to play that forward to get myself that move, if we can get that downward move based on those momentum changes we've seen on the chart.
All right, interesting potential trades there, guys. Thanks for laying out the
you.
bull and the bear cases for Chewy. The only thing I'll add is the one time I bought pet food off the internet instead of a brick and mortar store, I bought a giant bag of cat food. Looked like a dog to me in the picture, but apparently it was a cat. We don't have a cat, so just a reminder to our viewers, this debate was for educational purposes, not reflect our personal opinions about the stock. Before we move on, Jason, you want to elaborate on the heat map feature that we show off the top of the
Yeah,
show?
let's talk heat map, because it's such a pretty picture, right? It shows this. It's a nice thing that's a visual, right? It's watch lists are a great tool. Everyone's probably very familiar with those. I'm sure we'll talk about those at another time in the show. But a heat map is a way that it can really draw your eyes to see what's moving the market, what's up, what's down, kind of what that relationship is. And coincidentally enough, we do run weekly classes on TD Active Trader on the Learning Center in Webbroker. We're running a class all about research, really heavily focused on charts as well as some of the other research tools and platform. Our wonderful colleague Ryan will be running that, and heat map will be a big portion of that. So if you want to continue this discussion, join us in that class for that. Looks like I got to get myself logged in. I got timed out on the platform. Once that's back up, we'll jump ourselves into where we can find.
I got my heat map up right here.
There you go.
We're not going to do this for real, but there we go.
No, I've got
There's
it
my
going
heat
here.
map. I use it all the time.
I know you do.
Even when I'm not on it.
So if we want to find where the heat map is here in the platform, we are going to bring ourselves to the Market Watch tab. But the beauty of TD Active Trader is you can create your own tabs and integrate whatever custom tools that you want here. All right, so I happen to have a heat map of the S&P 500 up on the screen. So we're getting a good glance. We can see GE is in bright red. We've got Google and Tesla, Eli Lilly up in bright green, so we can get a sense of kind of what's moving in the market. The one really tool that I want to show off is the opportunity to really get this visual across really whatever indice or sector that you're looking for. On the left-hand side, these drop-down menus, if we just look at public, noticing here that there's all of the major indices here and talked about the rut there. If you wanted to get a visual of that, that's 2,000 shares. The boxes might get pretty small, but you've got the opportunity to do that. We can even break it down into particular industries or even do scans of sectors. But where I think this tool gets really unique is you have an opportunity to actually get a heat map of your own individual watch list. If you go ahead and expand the personal tab at the top of the screen, I've got a number of different lists that we've got going on here. Let me just go into list one. This happens to have a lot of the companies that we've talked about on this show, and so here's a list of those. So it's just a way that I can really hone in on, get a quick piece of information, and then kind of move on with my day. But it's a really neat tool that I can get the information that I want on the stocks that I'm concerned about.
One of the first things I look in the morning when I'm getting ready to do the shows. Thanks for that, Jason. If there's a stock you at home want to see our debaters go head-to-head on, send your suggestion to td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. So if you can't join us live, be sure to visit our YouTube page. You can catch up on all the previous debates, lots of good ones there. The link is right there at the top. And when you're there, don't forget to like and subscribe. All right, we know we got a lot of big events this week, different reads of inflation and price pressures, all kinds of reports. What are we all keeping an eye on here?
Yeah, you mentioned it, Greg. I think the big ones that are going to really move the markets this week potentially will be the CPI and PPI numbers. CPI is coming out on Wednesday in the morning there, so both the core and headline will be the ones to keep an eye on. Expectation is, I think, on the core about 2.9% is the consensus year over year, which would represent the highest in 3 months. And when we look at the benchmark Fed funds interest rate futures, it looks like they've dismissed the possibility of a rate hike in June or July right now. Next one, maybe at least one, maybe two price cuts is what's on the cards right now. Potentially one going to be in October is what we're looking at, and then PPI, which will be the Thursday. But the other big thing that's going to move the markets is on Thursday there's a 30-year bond auction that takes place. So the U.S. Treasury will be selling approximately $22 billion in the 30-year Treasuries, and that's going to be a key thing to watch in terms of the interest rate that they go for. Essentially, what's the demand for the U.S. long bond is what we're looking at. But just coming back to like some stocks we're looking at, Oracle is the one I picked out. They've got earnings actually tomorrow after the bell. They'll be reporting. I've got the chart pulled up. So this is a company that we're all familiar with, software and cloud giant, of course. And it's been on a bit of a run. Earnings expectation is on the EPS side 164. That's about a 0.6% increase, and about 15.5 billion on the quarter for revenue. That's 8.8% increase over the last quarter, year over year. One of the notable things, though, they have missed 3 of the last 4 quarters on the numbers there. But one of the big things that analysts will want to tune in and investors will want to tune in for is the Oracle cloud infrastructure growth. How that's really being, how that's competing against like the likes of Amazon and Microsoft. In fact, they have this, they've built like a super cluster computer that's powered by up to 131,000 NVIDIA GPU Blackwell chips, which they're giving to access to their customer on the large enterprise scale. Charts is a clear uptrend. You can see we've got gapped here. It's actually respecting it, and it's acting as a dynamic sort of support right now. It is going to this key supply zone in that 178 to 182 level. So going into this print, we're looking at expectation is about roughly about a $12 to $13 move up to the upside or downside. So if they do surprise to the upside, we could hit this new 192 low. On the downside, 164, maybe even breaking below on this downtrend is where the next level we'll be looking at. Keep in mind, I am looking at the gaps that it's formed, which it hasn't closed yet. We know technically in charts they tend to fill up the gaps. We just don't know when. But this could be a momentum driver that may, if they disappoint, that it could come down to that 150 level potentially as well.
All right, Jan, your picks, what you're looking at, it's all the feather in the nest.
You got it. I'm looking at RH, and they are reporting this week as well, formerly known as Restoration Hardware, right? They report June 12th after the bell. They're a luxury home furnishing retailer, lifestyle brand. Two things that jump out to me when I hear luxury. This right now in this economy, I just worry about kind of what that guidance looks like, right? We've seen other luxury brands that have kind of had to readjust some of those guidance. So it'll be interesting to see what they've got here. And the second thing, you mentioned also there's conversations off in London between trade delegations from China and the United States. RH gets a large amount of their products from overseas, as you'd expect. 72%, in fact, are coming from Asia. 35% coming out of Vietnam, and 23% coming from China. So they're going to be that could have a significant either tailwind or headwind effect on the company. And they've already come out and said that tariffs pose anywhere from a 3 to 10% risk to their bottom line. So interesting to see. But jumping to the chart here, we can see on their last earnings event there was actually a big gap down. There was a miss on earnings per share. And if you're looking for a viral moment, you could maybe give it a Google. Their CEO Gary Friedman had a bit of a viral moment when he was watching the stock price drop during the live conference call. But trading has been moving upwards over the last number of weeks. But what you mentioned, gaps are oftentimes filled in. In this particular case, as you can see in the chart, there's been some hesitancy. The stock hasn't quite filled in that gap. It actually kind of moved back towards that resistance line. There is potential head and shoulders that's forming. That if we can get it, if there's some negative earnings, we might see a measured move down to $117. But lots of news coming out. It's a lot of it's out of their control. But big news on Thursday. We're waiting to hear from them.
Important stuff to look out for. Thanks, gentlemen. It's all the time we got for this week. It goes by so fast.
Sure does.
All right, that is the show for this week. As always, investors should perform their own due diligence before trading. Thanks for watching.